Welcome to the Transparent FX Academy. I'm Nick and I'm a top author on TradingView with over 190k reputation points. If you're new to the channel, make sure to subscribe. This is the place to go for high quality, free trading education. Now, without further ado, let's jump straight onto the chart.
In this video, I want to speak about Euro USD because at the moment we do have quite interesting price action and structure. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect of this market, then we will move to the order flow, and by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here on this pair. Now, starting from the monthly time frame, what we can see is that at the moment this area is acting as previous monthly support. In fact, from here, all this move to the upside was created, which is now turned resistance. However, at the same exact time, we also know that here we have previous support when the market tested its zone and created this green candle, which is now still acting as support. So from a monthly perspective, we are trapped in between this resistance and support. Dropping down on the weekly time frame, what do we have? Now, from a weekly perspective, first of all, we must acknowledge how, since we have an impulse and correction in general, after an impulse, if you want to measure the correction, you have to take your Fibonacci from the low to the high of the impulse leg. And what we can see is that we do have the 0.618 Fibonacci retracement currently lining up exactly with previous weekly resistance turned support, creating confluence of support at this area that we could expect this market to reject to the upside. We can also notice how exactly at this high, this is where the market created this huge wick. And as it created this wick, this zone became a very strong supply area and resistance. So if the market will go and test this area again, we could expect a potential rejection to the downside away from this zone. Going down on the daily, things, however, get quite complicated. In fact, what we can notice is that from a daily perspective, the market is currently bounded in a range. In fact, what we have here is daily resistance, which was also previous support and resistance. In fact, this area was acting as support here, preceding this move to the upside, tested again here, rejected to the upside. The market then broke it to the downside. As you know, in the market, previous support, once it gets broken to the downside, becomes resistance. The market tested that resistance here, rejected it to the downside, tested it again here, once again rejected it. So in a situation like this, where we're testing previous support and resistance, we are kind of stuck below this level. However, at the same time, this support is still holding. Let me identify it in a bit more clear way. This zone here, which is previous daily support, is still acting as support. In fact, the market tested it one time here, again here, and now we're rejecting it once again. So in a situation like this, the market, from a daily perspective, is bounded in between this previous daily support and resistance and this previous support, which is still acting as support. So in a situation like this, we definitely have a problem. We need to see the market either break this range to the upside or break this range to the downside before we could be looking for any kind of interesting setups. Now, if we go and see what we have when it comes to the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, and we check the data for the euro, what we can see is that with the last reports, net positions have been decreasing. We went from 146k all the way down to 134k net positions. So we definitely had a decrease of the net positioning with the last reports. This shows that at least in the short term, the euro is getting weaker. So it could seem like we would have a good probability of seeing a potential break below this support. However, at the same time, if we look at the long term, we went from a negative net positioning of minus 47k net positions from an institutional perspective with more shorts than longs to now having positive net positioning with more longs than shorts. So it would appear here that we have short-term bearish euro, long-term bullish euro. So what we could expect is a short-term move to the downside before then getting more bullish continuation. However, in a situation like this, as usual, we have to be reactive and not predictive. if the market will successfully break above the high, at that point, previous resistance would become support here. So if we would get this break after a break on the retest, that is where we could be looking for a rejection to the upside. Same thing if we get a break below the range. If we get the break to the downside, previous support would become resistance. At that point on the retest, that is where we would have good probabilities for a potential rejection to the downside. So these two areas here that I'm now identifying, these would be the two interesting areas that the market, inside of which there would be good probability of seeing a reversal either to the downside or to the upside, depending on which side the market creates the break. So if the market breaks either to the upside or to the downside, how we could be approaching a situation like this? Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to bullish market, or here bullish to bearish market, and provide to us one of our valid entries, depending on what our personal valid entries are, at that point, we could be looking for a potential completion of an impulse correction and impulse pattern to the downside, either to the upside or to the downside, depending on the direction of this break. Now, if you don't know what I'm speaking about when I say valid entries and these kind of things, that is all part of the mentorship program, which you can find at transparentfxtrading.com. Here you have the possibility to gain access to my entire course with all the rules of the strategies. You also have the possibility to gain access to one-on-one private mentoring, the VIP market breakdowns with the Telegram signals, the COT data software, which is the one that we use precisely in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you continue to scroll down, you will have the possibility to join and gain automatically access with the email and password that you will create during the registration process. So definitely make sure to at least go and check it out at transparentfxtrading.com, and I will see you on board.
If you enjoyed the video, make sure to smash that like button and comment below. It really does support the creation of more free analysis education and updates for all of you, and I will see you in my next breakdown.